for this evening's virtual meeting on gearing up for ROC annual filing and annual return. Today we have with us CA Ujjwal Jindal, one of the dynamic and enthusiastic resource who is going to enlighten us on this topic. Welcome Ujjwal sir through virtual mode to Hyderabad. Welcome to our immediate past chairman of Hyderabad branch, CA Pankaj Kumar Trivedi, and my management committee colleague and treasurer of Hyderabad branch, CA MS Rajanpal. Welcome to both of you. Welcome to all the members once again. I request CA Pankaj Kumar Trivedi, our immediate past chairman, to give overview of the today's program and opening remarks.
Thank you very much, Satish. Speaker of the day, CA Ujjwal Jindal, Secretary of the branch, CA Satish, Treasurer Rajambal, all the attendees present here. At the outset, on behalf of Hyderabad branch of SIRC of ICA, I would like to congratulate the newly elected president of ICA of the year 22-23, Dr. Devashish Mitra, who is from Guwahati EIRC. I would also like to congratulate Vice President of ICA for the year 22-23, CA Aniket Talati from Hyderabad, and I express confidence that under their leadership, ICA would be scaling greater heights. And coming back to topic, friends, one of the very, very important topic, and if we go back to about, say, 10, 12 years back, in fact, it was one of the most important activity all of us are doing. But from last few years, maybe we are trying to delegate this work more and more to the company secretaries. So we thought that Hyderabad branch should try to bring some expert speakers and talk about the ROC filings and all, so that we just do this important activity and are aware of the important things connected to ROC filing. With e-filing taking place and the penalties in place, it is important that we start giving due importance, and hence today's topic. I'd not like to take much time because I would also like to listen as a student to Ujjwal. So Ujjwal, welcome once again to Hyderabad branch, and I'm sure today's topic could be a very important and an eye-opener for many people like me who are not much into ROC filing. So thank you very much, Satish. Over to you.
Thank you for your opening remarks. Before presenting to the speaker, I request CA Rajambal MS, Treasurer of Hyderabad branch, to introduce today's speaker, CA Ujjwal Jindal.
Thank you, Satish. A very warm welcome to the speaker for the day, CACS Ujjwal Jindal, past chairman of Hyderabad branch, Pankaj Trivedi sir, Secretary Satish, and all the delegates. I know it is very difficult to take out time just 3 days before the end of deadline. But the topic is such that we cannot just avoid or ignore or not listen to it. Very rightly, Pankaj sir has said that this is one line of expertise that we can still look into and get more knowledge by digging deeper into the subject. And to do that, we've got Ujjwal Jindal with us today. Ujjwal is a first-class commerce graduate, BCom from Delhi University, associate company secretary, practicing chartered accountant, law graduate from CCS University, investment foundation program certified from CFA Institute, Lean Six Sigma White Belt certified, founder at UJ & Co Chartered Accountant, co-founder at UJ Legal LLP, experience in the field of direct and indirect tax law, corporate, secretarial, and allied laws, and also capital markets. Content writer for Taxman, CA Club India, Tax Guru, newsletters and journals of ICAI and ICAS, speaker, consultant, and tax expert at various platforms. Certified in blockchain essentials from IBM and digital marketing from Google. Created various courses relating to finance, valuation, accounting, taxation, budgeting, corporate law, audit, management, accounting strategies. Oh my God, the list is very long. I think I'll just stop it here. And before we end, Ujjwal, you please make sure you tell us where did you find time to study so much? We might also go and get a little bit of time from there. Back to you, Satish.
Yeah, thank you, Rajam, for your nice introduction. Ujjwal sir, now the screen is yours. Please proceed further.
Thank you so much, Satish ji. First of all, I would like to thank the Hyderabad chapter of ICAI for inviting me for this session. Thank you so much, Satish ji, for inviting me. Thank you so much, Rajambal ma'am, for the wonderful introduction. Thank you so much, Pankaj ji, for being there and also for highlighting the main concern that this avenue or this compliance thing is not limited now to just the company secretaries. Even the chartered accountants have a very big role to play and to handle in the compliance component of this companies and ROC compliances. Time and again, we see that government is easing off the compliances and putting more and more emphasis on less of certification and more towards statutorily or doing the compliances on one own. And the professionals have to ensure that their client's data is getting in the right direction with the ROC. So with this, we begin today's session, that is gearing up for the ROC compliances for 2020 and 2021. That is the previous financial year for which we'll be filing the returns this February, AOC 4 on the 15th, and MGT 7 on the 28th. Today's discussion is primarily focused on the annual return part only, that is MGT 7 or the MGT 7A. Other returns include the LLP 11 form, that is also a return for the LLPs, or the MSC 3, that is for the dormant companies, and also FC4, that is for the foreign companies that are incorporated outside India but are filing their annual returns with the ROC. So we'll be beginning with the session very quickly. We have 2 hours for this particular session. I am sure I'll be completing the entire discussion in 1.5 hours. I'll not take much. We'll be taking a demo of all the forms that are in place. Also, I'll be highlighting what the complexities we are facing in filing these returns, because in January itself, the last date was extended by a month by the ROC and MCA. But there were complexities that every professional was facing while even accessing the MCA or even while finalizing for the forms. So what we have done is we have compiled all the information, gathered all the statutory provisions and compliances for you, and have put in place with the Hyderabad chapter this time. And we are sure that after this particular session, we have been very good aware about how these compliances would be in place. And secondly, we'll be able to do them ourselves and not to rely upon any other professional or an outsourced agency for doing this particular task. So with this, I start my presenter. So yes, we are doing it. We are gearing up for the ROC compliances, and primarily we are focusing towards the annual returns, that is for the financial year 2020 and 2021. A brief introduction about me, my WhatsApp number and website, you can visit. So scope and coverage of today's session. So our today's session will primarily focus upon the following pillars. The first one would be annual return, with the meaning of annual return and interpretation of its purpose, like why we need the annual return or what is the purpose of such annual return. Second, we would be analyzing in-depth and relevant provisions of the Companies Act, read with Company Rules 2014, and notified secretarial standards that have been issued by the ICSI and that are notified, that are relating to the annual return. Then we'll be also analyzing the in-depth provision that are related to LLPs and read with the LLP Rules 2009 relating to the annual return. We'll be also covering up the analysis of various annual return forms that are required to be filed with the ROC by various entities. Like I mentioned in this beginning, not just the companies, even the dormant companies or the foreign companies will be also a part of our discussion. And for the, we are talking everything in relevance about the financial year 2020 and 2021 and even onwards, because the amendments that have been made by the MCA or the ROC that are even relevant for the current ongoing financial year. So it would be relevant even for the current financial year for which we'll be filing the returns the next year. So this would be all, and we'll be also diluting the complexities in filing of the annual returns with the ROC that all the professionals have been facing in the past in January, December, or even in February. And last but not the least, the Q&A session. So half an hour we'll be giving solely towards the Q&A session itself. Quickly starting up with the annual return and its purpose. So we all understand that annual return in itself, like what the name suggests, it means filing of something on an annual basis. That is why we call the return as annual return. So anything that has been filed annually with the ROC that pertains to an entity or a body corporate, being a company, LLP, or any other entity. So that the statements that are filed in regard of that particular company or body corporate becomes an annual return. So annual return has not been defined specifically in the Companies Act, but it has been defined by various people in their own ways and style. I have incorporated or picked up the best meanings that are like really defining its true intent, that what for the annual return stands, and let's quickly see it through a Google lens or a PAR lens, that how these things are working up. So an annual return is a document that contains detail of a company's share capital, indebtedness, directors, shareholder, changes in directorships, corporate governance disclosures, etc. So when you'll be finalizing with the annual returns, that is MGD7, MGD7A, you will be requiring all this information if we see. We need the share capital details, the loans and the borrowing details, the director details, the shareholders detail, and even the changes that have occurred in the directorship or the corporate governance disclosure or other disclosures that are alike. So this definition of annual return explains exactly what we are filing with the registrar. The second is annual return being a publicly available document prepared by a company every year with the information available as at the close of the financial year to be filed with the registrar of companies. So again, we understand that annual return is a publicly available document. That is, you can always visit for the MCA website and fetch the copies of the publicly available document, and there you will be always finding, if the company has duly filed for the same, the annual return of the company, and thereby you paying the desired fees or the necessary fees that is there, you can inspect the copy of the annual return that has been filed by a specific company. So that is why it's a publicly available document in the public domain. And it is not a financial document otherwise, rather it contains general information about the company, its member, its activities, and other useful information. We never see the financials going in place where we are filing for MGD7 or MGD7A, that is termed as the annual return. All such disclosures are coming up in the AOC4 or the AOC4 XBRL CFS, that is the financial disclosure, or for the LLPs we talk about LLP 8. So there we are all filing for the accounts, the balance sheets, and the P&L. But in the annual return, we are filing for whatever activities are going in the company that are apart from the financial information. However, you have to mention the loans, the directorship, that are also a part of the financial disclosures. Otherwise, even the share capital is, but that is again the governing component of the company in a real sense. Next, annual return is an yearly document. It's an yearly statement that is required to be filed by every company, irrespective of their nature or status. So even if your company is a small company, it's a big company, it's a listed company, it's a one-person company, if you are standing at the position of a company, you have to file for this annual return. So this becomes a mandatory statutory compliance, which highlights the information about company's various aspects pertaining to its composition, activities, and even to an extent to its financial position. Because the MGD7 or the MGD7 is always asking you to disclose the turnover of the company or its net worth. So again, some component or some part of the financial information is always crept in through MGD7 or the annual return. Next, annual return is not a tax return. It is simply a corporate law requirement, and every entity is legally obligated to file this return with the ROC. So we are very clear, we are professionals, we know that it's not a tax return, it's an annual compliance corporate law requirement that every company has to make it with the ROC. The Companies Act and the LLP Act mandates to put information in annual return as on the last date of the financial year, irrespective of the information stored on the date of the AGM. So this is a very crucial line, very important line. I'll show you how this is very, very, very important. And today, every professional who is there in the discussion would be learning one new thing for sure, that how you can edit the name of the company. You hear me right, the name of the company in MGT7 or MGT7A, even when you're pre-filling the information using the SIN details, because the annual return has to be as on the last date of the financial year. And if on 31st March, the company's name, the company's address, or the company's communication address is different, then you have to pour in or key in the information that stood on the 31st of March of that particular financial year. So you'll be learning everything, how things get done, how these changes can be done, and why they should be done. Even I'll be telling you all this. So this was a brief about what is annual return, and we simultaneously understood about its purpose. Let's quickly move to the advanced, the Companies Act, read with the Company Rules 2014. Now let's have a brief about what the provisions are in place. So I have prepared a flow chart for the same to explain those. So for the annual return, as per the Companies Act 2013, so there is the Companies Act, and we have in the Companies Act a total of 29 chapters that goes from 1 to the Roman 29. Just give me a second. Yeah. So that goes to 1 to 29. So in these 29 chapters, we have specific relevant chapters that I have marked as 3 important chapters that talk about the annual return. So coming towards the first one is the chapter 7 that talks about the management and administration. And in that management and administration chapter, we have section 92 that says annual return. So we'll be studying section 92 of the Companies Act 2013 annual return in detail. Next, we have chapter 22 that talks about companies incorporated outside India. So these are foreign companies that are doing its activities in India, but however, they have their registered office or their main operating hub at a country which is separate from India, or they are companies that are incorporated outside India. So chapter 22 talks about those companies, and their annual return is talked in for section 384 subsection 2. And the section 384 subsection 2 gives a gist of how these companies which have been incorporated outside India and are carrying its business operations in India or are incorporated as a foreign company in India, how their annual returns would be finalized. There is one more chapter that is dealing, that is 24, that is the miscellaneous chapter, and it has a section called section 455 that relates to the dormant company. So even the dormant company is a company, and it has to also comply with the annual return compliance. So even if your company is not doing any business, it is obligated under the Companies Act to file for its annual return with the ROC every year. So this is all about the Companies Act. We'll be studying in detail the section 92, section 384 subsection 2 for the foreign companies, and section 455 for the dormant companies. Now section 92 would cover even the public company, even the private company, even the one-person company. Moving towards the next thing, that is the annual return as per the company rules. So these sections would have definitely be having rules upon which the administration and management of this section would depend. So the company rules again 2014 has been bifurcated into various chapters, and these chapters are consistent with the Companies Act. So like in the Companies Act, we have chapter 7. So in the company rules 2014, we have chapter 7 that deals with the management and administration, and it has 4 vital rules. Rule 11 that talks about the annual return, Rule 12 that talks about filing of the annual return, Rule 15.3 preservation of the annual return, and Rule 16 copies of the annual return. Then for the foreign companies that are there, like companies incorporated outside India, we have chapter 22 again, and it has Rule 7 for the annual returns in specific. And chapter 29 is there, part 2, that talks about miscellaneous, and it has Rule 7 which talks about return of the dormant companies. So we'll be reading these sections like the sections that we talked about in the Companies Act with these company rules. First, we'll be discussing in detail the company, the provisions as per the Companies Act, and then simultaneously we'll be moving towards the rules. So we'll be covering up the company's component first, then we'll be moving simultaneously to the LLP thing. Third coverage that we have included in this discussion, and it is limited to this slide itself, that talks about the secretarial standards that have been issued by the ICSI. So if we see that the corporate law or the corporate component is more in place by the company secretaries. So the Institute of Company Secretaries of India has issued 2 SS that have been notified as on date. So they talk about the disclosures that have to be made in the annual return, and the SS2 that has been there with effect from 1st of October 2017 talks about general meeting and contains a clause 20 which talks about the disclosure that annual return of a company shall disclose the due date of AGM held during the financial year. So basically the secretarial standards which are in place are more or less the subsets of the Companies Act or the company rules itself. So it contains the simultaneous provisions that are already existing in the Act, just making it quite clear or quite specific that these compliances have to be in place for sure if you're talking about the general meetings or the annual return. So this particular section, there is one section 118 subsection 10, and it says that every company shall observe secretarial standards with respect to the general SS2 and board meetings specified by the Institute of Company Secretaries of India, constituted under section 3 of the Company Secretaries Act and approved as such by the central government. So this SS is specifically notified, and that is why, as per the Companies Act, it's basically its compliance has to be observed. But the SS is very clear if we see that it just asks us to disclose the date of the AGM, and we are already doing it in MGD 7 as or the MGD 7A as it's a mandatory thing to be done. So that is already in place. Just as a part of coverage, I also included secretarial standard in our discussion. So let's now study in detail the three sections that we discussed, moving with section 92 that talks about the annual return. So every company shall prepare a return, hereinafter referred to as the annual return, in the prescribed form. Whenever there is a word which says prescribed, so that means that we have to talk in for the same in the rules, the company rules. So where it has been specifically mentioned here as in the prescribed form, So there is rule 11 that talks about annual return. So we'll be studying that rule 11 in a moment, containing the particulars as they stood on the close of the financial year. Again, these words are very important. As they stood on the close of the financial year regarding, number one, its registered office, principal business activities, particulars of its holding, subsidiary and associate companies, its shares, debentures and other securities and shareholding pattern, its members and debenture holders along with changes therein since the close of the previous financial year, its promoters, directors, key managerial personnel along with changes therein since the close of the previous financial year. Then also we have to disclose the details of the remuneration of directors and key managerial personnel. Then the meeting of members or a class thereof, board and its various committees along with attendance details, penalty or punishment imposed on the company, its directors or officers, and details of compounding of offences and appeals made against such penalty or punishment. Matters relating to certification of compliances, disclosures as may be prescribed. Again, we'll be studying it as may be prescribed in the Rule 11. Details as may be prescribed in respect of shares held by or on behalf of the foreign institutional investors, that are the FIIs, such other matters as may be prescribed. So again, if anything is left out and the government can come up with those matters specifically by rules, they can come up. And signed by a director and the company secretary. So it's not or the company secretary, it's and the company secretary, or where there is no company secretary, by a company secretary in practice. So you have to get the annual return, that is MGD 707A, signed by a director, that is a mandatory, or by a company secretary, that is an employment in the company, or if there is no such company secretary, because it is also as per the Companies Act and company rules that a company is required to employ or to have a company secretary on its board as a KMP or as a company secretary in whole time, as a company secretary who is looking after the activities of compliances and statutory followings of the corporate laws and Companies Act in specific, or the company secretary who is in whole time practice. So that is an independent practicing company professional, company secretary professional. So we have to get that particular annual return signed by these two people. But there is a proviso, provided that in relation to a one-person company and small company, the annual return shall be signed by the company secretary, or where there is no company secretary, by the director of a company. So there we see the word is there that says or by a director of the company. So where there is no company secretary, that is company secretary is not on the board, or the company is not required to mandatorily employ for a company secretary on its board as per the Companies Act. In that particular cases, the directors themselves can certify or can attest or can file those annual return forms by affixing their specified signatures. So in that particular case, there is no need of company secretaries in whole-time practice or company secretaries in employment. And that is why it is very essential that we learn these provisions, because as a chartered accountant, our responsibility has again risen up. because our clients or the companies are solely relying upon us for filing of these compliances, because they have more or less very less idea about the compliances that have to be in place. So we'll have to check for these annual return forms that are in place, like what all the information is being there, what all the things have to be filed in. So the chartered accountants or even the cost accountants and other professionals who are into this field, into the practice, they have to see for that all these forms are prepared following the provisions of the Companies Act, so that there are no non-compliances that your client faces. Provided further that the central government may prescribe a bridged form of annual return for one-person company, small company, and such other class or classes of the companies as may be prescribed. So there is an abridged form, a small form, a short form, and this is in picture for the very first time, starting with the financial year 2020-2021, that will be filing for the returns in the month of February, that we have an option, or we have been mandated to file the annual return of the OPC and a small company or such other class of company, that the central government may notify. A abridged form is known as the MGT 7A. So 7A, A stands for the abridged one. So this is how this abridged form of annual return is in place and has come in for the first time. So we'll be understanding everything about MGT 7A. We'll be also seeing the form in real, and also how these things will be filed from now. Moving towards section 92, we were covering this section 92 subsection 1. Now we are moving towards the subsection 2. So the annual return filed by a listed company or by a company having such capital and turnover as may be prescribed. Again, we'll be seeing the rule 11 for the same. Shall be certified by a company secretary in practice in the prescribed form, stating that the annual return discloses the facts correctly and adequately, and the company has complied with all the provisions of this act. Now, the company secretary has to give, who is in practice, like independent practicing company secretary, who is in practice, shall give a certificate to the company which is listed or having such capital or turnover as is given in Rule 11. So that particular certificate has to be given up in the form MGT 8. We'll be also seeing the form MGT 8, how this report has to be annexed, and that particular certificate will have the disclosure that the company is following the corporate laws and the allied laws in full spirit, and that is why there is no non-compliance on the part of the company. So this is again a job that the company secretary has to do, but again it's only for the listed companies or such class of the company. We'll be seeing in Rule 11 in a moment. So we'll move towards the subsection 3 now. Every company shall place a copy of its annual return on the website of the company, if any, and the web link of such annual return shall be disclosed in the board report. So the web link of the annual return that the company is filing has to be given up in the board report, and simultaneously it has to be disclosed on the website of the company if there is any website. If there is no website, then no disclosure is required. Okay. So this was all about the 3 subsections. Now coming towards the 4th subsection. But before that, let us have a view of what these definitions that we have seen in this particular thing. We see one-person company, small company. So what are all these companies and what is their classification, that how one classifies a one-person company or a small company? The definition of one-person company. So the shareholder is just one. The directors can be many. So one-person company will effectively have just one person, that would be the shareholder or the member. That becomes a one-person company. The small company means a company other than a public company. So that means that a public company can never be a small company. Only a private limited company can be a small company. So a small company should have a paid up share capital which does not exceed 50 lakh rupees 2 crore from the financial year 21-22. However, we are focusing our discussion on the financial year 2020-2021. So in effect, we have to see for these limits that are specific to that financial year. These limits have been revised by the previous budget that came in, that were the of rupees 50 lakh for the paid up share capital. So if the paid up share capital of your company in the financial year 2021 did not exceed 50 lakh rupees or such higher amount as may be prescribed, which shall not be more than 10 crore. So this is again a higher benchmark that has been stated in the law, that at any point of time, this particular limit cannot be enhanced by the government in excess of 10 crores. So that is the maximum limit. However, the current prevailing limit is 50 lakh. And for the next financial year, that is the financial year we are into, it is 2 crores for the financial year 21-22 and onwards. However, for the previous year, it is 50 lakh. So if your client company is having a paid up share capital of 50 lakh, you can classify it as a small company, but there is just one more limit of turnover. So the turnover of which, as per the profit and loss account for the immediately preceding financial year, does not exceed rupees 2 crore or such higher amount as may be prescribed, but it shall not in any case exceed 100 crore rupees. This limit has also been increased from the next financial year, that is 21-22, and it is now 20 crores. However, for the previous year, we have to see for the 2021 year, we have to see the turnover not exceeding 2 crore to be classified as a small company. Now we see this word is in between is and. So we have to observe both the limits simultaneously. Even the paid up share capital should be not exceeding 50 lakh, and even the turnover should not be exceeding 2 crore rupees. The twin conditions have to be satisfied in order to get a status of small company. And that is when you can file in for the abridged annual return for such companies. Okay, so we have highlighted this particular point for the small company, like what its share capital, paid up share capital should be, and its turnover should be for the immediately preceding financial year. That is for 2020, 2021. You have to see the turnover of the company in 1920, the preceding financial year. So if it's up to 2 crore rupees, it's a small company, and you have to simultaneously watch for the capital, that is 50 lakh rupees. Provided that nothing in this clause shall apply to a holding company or a subsidiary company. Again, a holding company or a subsidiary company, these provisions are not applicable and they cannot be a small company. Next, a company registered under Section 8. Section 8 company can never be a small company. A company of these being electricity or insurance company that are being covered by specific acts, or even the IRDA for the company. So if you're, then it cannot be classified as a small company. For just conceptual clarity, turnover, that has also, yeah.
Seems there is a bandwidth problem from your end, just for information.
Okay.
Yeah.
I'll check it once.
Yeah, please.
Yeah. Okay. I guess things are good now.
Yeah, perfect.
They must be. Okay, perfect. So moving towards the part of turnover. So the definition of turnover has also been provided in the Companies Act, and in the section 2, clause 91, it says turnover means the gross amount of revenue recognized in the profit and loss account from the sale, supply, or distribution of goods or account services rendered, or both, by a company during a financial year. So you have to pick the meaning of the turnover as the gross receipts or the gross accumulated total turnover or total receipts that are there and have been recognized in the profit and loss account of the company, and it is from sale, supply, or distribution of goods or services rendered, or both. So you have to take in combination the entire turnover that is there in the P&L. Just a small gist on the one-person company definition, small company definition, and the definition of the turnover. Now moving towards the subsection 4. We already covered 3 subsections, 92.1, 92.2, and 92.3. Now let's study 92.4. Every company shall file with the registrar of company of the annual return within 60 days from the date on which the annual general meeting is held, or where no annual general meeting is held in any year within 60 days from the date on which the annual general meeting should have been held, together with the statement specifying the reasons for not holding the annual general meeting, with such fees or additional fees as may be prescribed. So the period to file this particular annual return is 60 days from the conclusion or from the date on which the annual return was held. If there is no annual return that was held, even then, as per the Act, whatever the date should have been for the annual general meeting to take place, 60 days will start from that particular period. Just for a conceptual clarity, the date for the annual, the AGM is usually 6 months from the end of the financial year. So if we talk about the previous financial year, that was 2020, 2021. So 6 months coming from March, it goes 30th September. But again, it was a COVID scenario and the meetings could not be placed in time. So an extension was provided for the same. So the extended timelines were 30th of November. For that, so again, within 60 days means by the 28th day of January 2020 due to COVID pandemic and also non-working of the government portals in place. Again, this date was further extended by a period of 1 month, and now the date finally to file for the previous financial year gets 28th of February 2022. However, otherwise, if we see that this date would always be 30 days from the date of the last date of the annual general meeting, that remains 30th of September of the relevant financial year. However, the company can anytime conduct its AGM at a much earlier date as per the convenience or as per how the financial and accounts and everything gets prepared and are in place. However, the AGM, the annual return has to be filed within 60 days from the date of AGM. So that would depend upon the company that whenever it's scheduling its AGM. Next, we come towards subsection 5. So before giving you a gist of subsection 5, let me tell you that the government is in the process of decriminalizing various of the provisions that are there in the corporate or the allied laws. What does decriminalizing mean? That the punishment would be by way of fee and not by actual punishing or putting the directors or the persons who are responsible for the offense behind the bars. So easing of those or decriminalizing those provisions would only entail liability to an extent of the amount of the specified amount that should be paid to the government. That is, it has to be a monetary compensation or monetary fine that has to be in place. So these provisions have been decriminalized now. And the subsection 5 says if any company fails to file its annual return under subsection 4, we have just covered subsection 4, before the expiry of the period specified therein, that is 60 days from the date of the AGM, such company and its every officer who is in default shall be liable to a penalty of rupees 10,000 each. And in case of continuous failure, with further penalty of rupees 100 for each day during which such failure continues, subject to a maximum of 2 lakh in case of a company, or 50,000 in case of an officer who is in default. You see the quantum of penalty is so much, it can go from 10,000 at once and 100 rupees per day till 2 lakh rupees and 100 rupees till 50,000 for the company or the director. So you can understand the quantum of penalty and the need that why we should have a very good understanding about the annual return and why every detail and every disclosure or in-time filing is required to avoid these particular non-compliances and penalties for the clients. So this is really, really important if we see the subsection 5. Previously, in the previous acts or in the previous provision, we would have seen these penalties as mentioning the punishment provisions as well. That is, a director could be made to pay fine or imprisonment or punishment or both. But now this has been decriminalized fully, and there are only penalties in monetary amounts which are really high that are in place. So 10,000, 100 rupees per day, 2 lakh and 50,000, specifically respectively for the companies and the offices. Next subsection is subsection 6. That is, if a company secretary in practice certifies the annual return otherwise than in conformity with the requirements of this section or the rules made thereunder, he shall be liable to a penalty of rupees 2 lakh. Even the independent practicing professional who has certified the return by providing the form MGT 8, if he is certifying that form incorrectly or has the company there is a disclosure that is not in place, even he can be filed for a maximum of 2 lakh rupees. So again, there is liability on the professional itself. So professional directors of the company, all these penalty provisions are existing on them, and that is why following the compliances in place is really, really important. So we complete with the section 92 here. Now moving towards the other section, that is for the companies that have been incorporated outside India. But before that, let us study the rules, that is the rule 11, or the other rules that are talking about the management and administration as per chapter 7 for this section 92 itself. So we'll be covering this section, the rule, the section, the rule, the section, and the rule, because there are 3 main sections we have to study. One is for the companies, one is for the foreign company, and one is for the dormant company. So we have covered it for the company. Now we are covering the company rules that are for this particular company setup. So rule 11, we have came in many a times, the reference has came up for the prescribed form. So this rule 11 talks about the annual return, and it's as per the company rules 2014. So every company shall file its annual return in form number MGD 7, except one person company and small company. One person company shall file and small companies shall file annual return from the financial year 2020-2021 onwards in form number MGT 7A. So this is the abridged annual return, and that is specifically mandatorily applicable to an OPC and a small company. Those companies have to file from now, from previous financial year, that is this time for the first time, the MGT 7A, and for all the other companies, the MGT 7. MGT is basically, we study the name of the chapter as management and administration. So management word has been given a brief, MGT, and 7 is the number of the form, and 7A is the 7 abridged. So basically this is what the form number or the form name signifies. The subrule 2 says, 11 subrule 2, the annual return filed by a listed company or a company having paid up share capital of 10 crore or more, or turnover of 50 crore or more, shall be certified by a company secretary in practice, and the certificate shall be in form number MGT 8. As I told you that for the listed companies and such companies having such paid up capital or turnover as may be prescribed. So the limits have been prescribed in Rule 11. The for this paid up share capital, it is 10 crores, and for the turnover, it is 50 crores or more. So for these particular limits, the company has to mandatorily obtain MGT 8 by a practicing company secretary, and they have to attach the same form with the MGT 7. So this specific compliance is only in place for the listed companies or for the companies that fall under this limit umbrella. And the limits are specifically or, and it's not and. So if your paid up share capital is 10 crore, but however the turnover is less, or your turnover is 50 crore, but the paid up share capital is less, even then the compliance of this particular sub-rule has to be observed, and MGT 8 has to be obtained from the practicing company secretary. Now let's study Rule 11. Rule 12, we are done with the Rule 11. So Rule 12 talks about filing of the annual return with the registrar. A copy of the annual return shall be filed with the registrar with such fees as may be specified for this purpose. Now this, the fees and the chart, they are already there in the data, and they are specifically dependent upon the paid up share capital of the authorized capital of the company. And the brackets have been given, the rates have been defined. I have specifically covered in this discussion the rates that are in place for the LLPs. However, this is no such a thing that we talk about, like it's not a logical thing to understand, so that it is just the fees. So we can study that from the disclosure part that has been there in the company rules. The extract of the annual return to be attached with the board report shall be in form number MGT 9. So why this strike of sign in is there? This filing of MGT 9 stands continued from the financial year 2020. Company, be it an OPC, be it a one-person company or any other type of a dormant company or alike, that have to file for their board report shall not be required to file the form MGT 9 that always went in as an attachment of the board report starting from the financial year 2021. So that is why this particular thing has been striked off. This was the law that was already existing in the previous act. However, this has been amended, and now we are not required in any way to observe the compliance or the mandatory compliance of filing MGT 9 along. Why? Because all the details that are there in MGT 9 are already a part of MGT 7 or MGT 7A. So essentially taking up this detail twice was like, it was not at all logical, and it was just duplication of efforts. So that is why the government has also observed this particular action and has finally withdrawn this particular provision. So there exists no form MGT 9 starting from the financial year 2021. However, this MGT 9 was not a physical form. Like when I say a physical form, means a digital form, just like MGT 7 or 7A. It was again an attachment format or a format that was prepared in Word and finalized by formal signing of the directors or the officers of the company. This stands withdrawn. No disclosure is required on the website for MGT 9. Basically, MGT 9 was an extract of the annual return that we talk about. And now nowhere we have to mention for the MGT 9. So MGT 9 goes away. Now moving towards the next rule, Rule 15.3, that talks about the preservation of the annual return. So whatever the annual returns you are filing, you have to preserve the copy for a period of 8 years from the date of filing with the registrar. The data would obviously remain with the registrar in the database that has been maintained by the ROC and the MCA registry. However, you have to retain the copies of all the certificate documents that are required or annexed in the annual return for a period of 8 years from the date of filing with the registrar. So 8-year preservation period of the annual return and its attachments have to be in place. Copies of annual return. So copies of the annual return filed under subsection 92 shall be furnished to any member, debenture holder, other security holder, or any other person on payment of such fee as may be prescribed by the AOA. So here this rule talks about if a person or a member wants to get the copy of that particular annual return from the company, then it can get the same. However, as per public inspection, if a person wants to extract the copy from the MCA database, any person can do that by paying the requisite amount of fees to the MCA website, and you can fetch the copies of the annual return. That is a public document. So I've just covered it like for the purpose 92, Rule 11, Rule 15.3 and Rule 16. Now moving towards India and how their annual return is being prepared or filed. So this is section 384 subsection 2, and it says the provision of section 92 subject to such exceptions, modification and adaptations as may be in place therein by rules made apply to a foreign company as they apply to a company incorporated in India. So all those effects that are coming by section 92 with such exceptions or modification and adaptations as may be notified by the act, so that will be in place for foreign companies. Otherwise, everything would be as per section 92 only. The disclosure and everything that are there in section 92 have to be in place for the foreign companies as well as per section 384 subsection 2. So what was this modification, adaptation or exception? That was with regard to the IFSCs, specified IFSC, that is international financial, that is the companies that are under the IFSC umbrella or the IFSC private sector companies, and that contained provisions that are in effect regarding the special economic zones. So because these are some special observations that the companies have to observe for, which are incorporated outside India and are carrying on business activities as per the foreign company in India. So they have to observe for the international financial service centers that are located in India. And that is why the Special Economic Zone Act 2005 applies to them. And they have to follow the provisions accordingly. And in the annual return also, these specific provisions would be disclosed as the same are contained in the Special Economic Zone Act. So that is the only difference or the adaptation or the modification till date. And that was also notified on the 4th of January 2017. Before that, everything was same and is same. And if there is any foreign company that is your client and that is not some specified IFSC private company, then also the every provision of section 92 become applicable to that particular foreign company, and there is no dissection or there is no diversion from the section 92 for such foreign companies. However, the form for filing this annual return of this particular company is FC4 and not MJD7. We'll be studying what is there in FC4 in just a moment. Now covering up the rule along with this foreign company. So every foreign company shall prepare and file within a period of 60 days from the last date of its financial year to the registrar annual return in form FC4 along with such fees as provided in the company's registration office and rules 2014 containing the particular as they stood on the close of the financial year. I can see that people have raised their hands on this. However, we'll be covering the doubt section at the end of the session because I guess pointing for the provisions is of much resource. Okay, let's do one thing. Let's cover the Companies Act portion first. And when we move to the LLP, I'll take a few of the doubts. Okay. Every foreign company shall prepare within a period of 60 days. They have to file from the last date of its financial year to the registrar annual return in form FC4 along with such fee as provided in the company's registration and office rules containing the particular as they stood on the close of the financial year. No much change. 60 days period also remains the same, but it is from the close of the financial year and not from the date of the AGM as was applicable earlier. So you have to observe the filing from the first, like 31st of March is the close. 60 days, you have to observe the filing of FC4. Next, moving towards section 455, subsection 5, that talks about dormant company. So a dormant company shall have such minimum number of directors, file such documents, and pay such annual fee as may be prescribed. That is Rule 7 to the registrar to retain its dormant status in the register and may become an active company on an application made in this behalf accompanied by such documents as fee as may be prescribed. So what is important to note is there file such documents and pay such annual fee. So these words specify that even the annual compliance or the annual return component is applicable on the dormant company, and the dormant company has to also observe filing. And for the same, we have Rule 7 in this regard, we'll be talking about that in a moment. Let us first understand what a dormant company is. So whether a company is formed and registered under the Act for a future project or to hold an asset or intellectual property and has no significant accounting transaction, such a company or an inactive company may make an application to the registrar in such manner as may be prescribed for obtaining the status of a dormant company. So a dormant company is otherwise a private limited company only, or just a company itself, be it any form. So that has to apply to the registrar to obtain the dormant status and becomes an inactive company. So what is the meaning of an inactive company? Means a company which has not been carrying on any business or operations, or has not made any significant accounting transaction during the last 2 financial year, or has not filed financial statements and annual return during the last 2 financial year. So if a company has not filed its annual return or the financial statement, the ROC can turn down the status of the company as a dormant company. However, a person can apply, or a company can apply for the dormant status if it is not carrying on any business or operation, or has not made any significant accounting transaction during the last 2 financial year. When we talk about not made any significant accounting transactions, so this is basically that it is not carrying on any business in substance. When we talk about significant accounting transaction, because day-to-day or fixed expenses, be it like for maintaining the registered office or paying fees to the professionals or the auditors of the company, that will be in place. And that is why significant accounting transaction word has been used, that if the company is not having any significant accounting transaction, then also it can attain the status of a dormant company, because there will be some of the other expenses that the company has to bear. So that is why if you are falling under this rules, or like highlighting these particular limits that have been prescribed for, you can attain for a dormant status. And even then you have to file for the annual return. However, the rule 7 for this particular provision provides for a dormant company shall file return of dormant company. So it is not mentioning annual return. However, it's an annual return only. As we see the rule, the very next word of this particular says return of the dormant company annually. So it becomes an annual return. Inter alia, indicating financial position duly audited by a chartered accountant in practice in form MSC 3, that is miscellaneous 3, along with such annual fees as will be provided in the company's registration office and fees rules 2014 within a period of 30 days from the end of the financial year. So for a dormant company, we see the condition for filing this return is basically 30 days from the end of the financial year. So 31st March, if you're talking about, so 30 days henceforth, it becomes 30th of April of the every financial year. So this becomes the date for the filing of the dormant company returns. Now talking in specific, this particular thing is like a joint or a conjoint form for AOC 4 plus NGT 7, MSC 3, because what we are filing is even the financial position as has been indicated by the audited reports. And the audit, it's mandatory for every company as per the Companies Act. So even the dormant company will have to get the accounts audited by a chartered accountant, and the financials and the P&L and everything and the audit report, everything would be attached. And with such attachment, even the information about the companies or the whatever the activities are going on, like if a director is coming up, a director is joining, leaving the incorporation, so that has to be also reported in MSC 3. So this MSC 3 works as a combination form, just like an AOC 4 or an MGT 7. So we see the next proviso provides that provided that the company shall continue to file the returns of allotment and change in directors in the manner and within the time specified in the Act, whenever the company allots any security to any person or there is change in the directors of the company. So even after attaining the status of a dormant company and by filing MSC 3, you are not relieved of filing any of the compliances that you have to be in line as per the Companies Act, that is for the return of allotment or there is change in director or in such manner as may be specified in the Act, that you have to keep in place. The return, the annual return for this MSC 3, that has to be observed separately. So with this, we complete the Companies Act portion and move towards the LLP section. So before that, many of us have raised hand. So let me take a few doubts before we proceed with the further discussion.
No questions, Ujjwal.
Okay, actually, I was seeing that people were raising hands in between.
Yeah, just one.
Okay.
Yeah,
so they were.
Candy.
Okay. You are finding the discussion not so good. That is why you've been raising hands in between.
No, so beautiful, actually.
Due to some technical issue from our end, we are unable to get the rule 12 topic. If possible, can you please explain again? Okay, rule 12. Okay. Any other thing? Any other thing that requires a re-explanation? What are the annual forms to be filed for small companies, MGT7A? Okay, this is the doubt section. So doubt section will be taking up at the end of the session, because we are yet to discuss what is MGT7A. We have to see the demo form and everything also. We are not complete with our session. This is just the provisions that we have completed. I'll be diluting that complexities, the compliance component, the demo forms, the prepared demo forms, the filed demo forms, everything is available with me. So we'll be discussing. It's a 2-hour session. And I guess we have completed half an hour by now. Okay, we have completed 1 hour. So we'll be moving a bit fast, and we'll be talking about the MGT7. Every company must file MGT7 and get audited. Yeah, for every company, audit is mandatory as per the Companies Act. And also you have to file in for the MGT. However, the applicability will depend upon that. If it's a dormant company, you have to file in for MSC 3. If it's a normal company, you have to file in for MGT7. And if it's an OPC or a small company, you'll have to file MGT7A. Okay. So we'll quickly take up the doubt of Rule 12. So I am coming back to Rule 12. Just give me a second. Okay, Rule 12 was important because it talked about the MGT 9 part. I guess everybody would be interested in knowing that, because that has been removed. Okay, so Rule 11 is okay. Rule 12 was with respect to filing of annual returns with the registrar. So the copy of the annual return shall be filed with the registrar with such fee as may be specified for this purpose. So the fees is contained in the company rules itself, and it is specific to the amount of paid up share capital of the company. So that is not much requiring a discussion. The extract of the annual return to be attached with the board report shall be in form number MGT9. So earlier, when we were filing for the annual returns, we were always annexing for the form the form MGT9 along, that had the same details that were contained in MGT7 or the MGT7A. So it was an extract of the annual return itself. But from now, considering that this to be a duplicate or a repetitive effort, so this has been mitigated in, and the government has taken back the provisions for MGT9, and no company is required to now file MGT9. These provisions just I have mentioned because these provisions have been withdrawn completely from the financial year 2020-2021. And I have highlighted them because I just wanted everybody to know that what existed before and how this has changed now. Earlier, MGT9 was also required to be disclosed on the company's website. The condition has been taken back. Was to be required to be attached with the board report that we filed in AOC 4. That has also been withdrawn. Okay. So this MGT9 compliance has been completely withdrawn now. So that was particularly the essence of Rule 12. So let us quickly move to the LLP section now. The question answers and everything will be taking up in the next half an hour probably. So I'll be taking up all the doubts that you come up with. So we'll go a little fast with the LLP because the compliances are already in place. The dates have already surpassed. However, just for the purpose of coverage, I'm taking it. So if we talk about the annual return as per the LLP Act, we have the LLP Act just like the Companies Act. It has 14 chapters, 1 to 14. And for the annual return, if we are talking, there is chapter 7 that talks about the financial disclosures, and there is section 35 that talks about the annual return. Again, coming towards the LLP rules, there are 2009. So it has again chapter 7 that talks about financial disclosures, and there is rule 25 which specifically talks about the annual return. So section 35 of the annual return, section 35 of the LLP Act says that every partnership, limited liability partnership shall file its annual return duly authenticated with the registrar within 60 days of the closure of its financial year. So 60 days means 31st of March, going ahead 30 days, it becomes 30th of May every financial year in such form and manner and accompanied by such fees as may be prescribed. This fees has been given in Annexure A, and I have, I guess, included this Annexure A in my discussion. If any limited liability partnership fails to file its annual return under subsection 1 before the expiry of the period specified therein, such limited liability partnership and its designated partners shall be liable to a penalty of ₹100 for each day during which such failure continues, subject to a maximum of 1 lakh for the LLP and 50,000 for the designated partners. Nearly matching provisions with the Companies Act. However, if we see that for a LLP, the filing fees usually ranges between 50 to 200. I mean, usually depending upon the contribution of the partners made. And for such LLP, the fee has been kept, the late fees has been kept as 100 rupees per day. So if you are missing on just one day, you are paying double of the statutory fee if it's 50 as the late fees for filing the compliances. So that's get heavy on the LLP. Even on the company, it's heavy. But 10,000 fees is like a fixed fees first and then 100 rupees per day. But for LLP, there is no fixed fees. It's 100 rupees per day. And the maximum it can go up to 1 lakh for the LLP and 50,000 for each designated partner. So two fairly easy subsections were there in the section 35. Coming towards the rule 25, it says for the purpose of subsection 1 of section 35, every LLP shall file an annual return with the registrar in LLP form 11. So just like MGT 7, we have LLP form 11 for LLP for filing up the annual return. The annual return, the LLP having turnover of 5 crores during the corresponding financial year or contribution up to 50 lakh shall be accompanied with a certificate from a designated partner other than the signatory to the annual return to the effect that the annual return contains true and correct information. In all other cases, the annual return shall be accompanied with a certificate from a company secretary in practice to the effect that he has verified the particulars from the books and records of the limited liability partnership and found them to be correct. Again, matching provisions from section 92. However, it cannot be, LLP cannot be a listed form, come into a listed format. So that is why the limits of the turnover has been specified. So if your turnover is up to 5 crores or your partner's contribution is up to 50 lakh, then there is no then certification of the company secretary is not required. If these the limits are more than this that have been devised for, then a certificate. When we talk about the certificates, it's again the certification component that he has to affix his digital signature on LLP 11. So that comes in place. So not much of a thing to discuss. The fees to be paid to the registrar in pursuance of subsection 1 shall be as mentioned in Annexure A. And I have also attached for the Annexure A here. So the Annexure A again talks about LLP whose contribution does not exceed 1 lakh have to pay 50 rupees, and it goes up to like 200 rupees if the contribution exceeds 10 lakh. So this is for statement of accounts and solvency and also for the annual return. So basically, this is for the LLP part. The same way it is for the companies, and the ranging chart, this same chart that has been given as contribution, that is given as paid up share capital for the companies. Okay. Now let us discuss quickly the annual return forms that you were asking about, that whatever the annual returns we have to file in and what are the forms that we have to file in for the financial year 2020 and 2021. So here comes the major learnings this time. We have just completed for the provisions and now we are moving towards the practicality of the things. So starting first and foremost with e-form MGT 7 that talks about the annual return. So where we see this particular star mark, it says that it signifies that I have a filled form that is available for our discussion, and this e-form MGT 7. So we'll be quickly accessing this e-form now. Let me show you that how these things are in picture in real effect. So I'm just opening up with the MGT 7. So this is a clear picture of how MGT 7 looks like. Everybody can see up on the screen. Just give me a moment. Yeah. So this is form number MGT 7, management 7, and it talks about the annual return, and it is pursuant to subsection 1 of 92. We have just covered this of the Companies Act and sub rule 1 of rule 11 of the Companies Management and Administration Rule 2014. We have studied these two in detail just in our discussion back. So every information is over here. I'll quickly give you a bird eye view of the form. Let me key in the filled form for bring in the filled form first to give you a better insight. But let us first see what we actually understood in the provisions that were there. So we studied that we have to give all the information and disclosures that exist and as on the close of the financial year. So let me open the MCA website. So this is the MCA website. Let us quickly take a random name for the company. So I'll take it as just a random name just for the sake of educating everybody. So I key in this corporate identity or the SIN number of the company here, press the pre-fill button, and you can see the information has came up swiftly. So now if you wonder that whatever the white fields are, these fields are not editable. However, the blue fields are always editable. This is only and only in AOC 4 and MGT 7. You cannot change the pre-filled data. So why this data can be changed? So say suppose there was a situation that a company has recently changed its registered office for we are talking about the financial year 2020-2021. So after 31st of March, like say the first week of April 21, the company has changed its registered office, and now
Ujjwal,
yeah.
there are a lot of comments coming.
Okay.
Ujjwal, I'm sorry to disturb you. There are a lot of comments
not a problem.
coming saying that they're unable to see the MCA site.
Okay. I didn't take anything from the MCA side. I just picked up the SIN number. So if you are able to see this form MGT7 right now, I guess we are good to go.
Yeah.
Okay. I'll see for the chat messages. You are not able to see the screen that is being shared?
No, screen e-form MGT7 annual return is there.
Yeah, that is in place right now. No presenter is there right now.
Yeah.
MCA site has had no relevance. I just picked up this particular SIN number for the company. That's it. Only PPT is visible. Okay, this PDF is not visible. That says MGT7 form.
It's visible, sir.
No.
It's
Only
visible,
PPT.
yeah.
1 minute. MGT7 is appearing.
See, I have moved up from the PPT. This is the PPT. I have moved up with the MGT7 now. So you are able to see the MGT7 right now?
No.
Everybody?
No, only the PPT is visible.
Okay, the PPT is visible. Okay, let me see. Let me reshare the screen. Just give me a second.
Yeah, consent slide out.
Just give me a second. I'll do that. I guess now it's visible to everybody. Perfect. Okay, great. So what we have done till now, we have just taken the SIN number from the MCA website of a random company, and we have poured that particular SIN number here in the MGT7 field. Okay, and just click the pre-fill button. So after this, we see that there are these white boxes and the blue boxes. So whatever information is there in this white box or anything that is appearing in this white box cannot be edited at all. But all the information that's in the blue box can be very well edited. Now, why MGT7 and AOC4 have been designed this way? Because as per the section we have read in the Companies Act, you have to disclose the information that existed on the very last day of the closing of the financial year. So say suppose I take a case of a company which was having its registered place of operations on 31st of March 2021 as X, and on the 1st of April or the subsequent days or the events before its AGM, the registered office of the company was changed, and the simultaneously changes were made in the MCA database because it's instantaneous. What will happen when you click this pre-fill button? The revised address that existed that exists on the MCA database or with the ROC will get auto-populated here. However, as per the rules, if we see that you have to key in the information that was on the 31st of March 2021. Okay, so that is why this registered office field is purely editable. You can enter the address that existed on 31st of March 2021. Even for the cases where a company was having a status as private limited, has converted itself to a public limited company. So say suppose as on 31st of March 21, the company was private limited, and in somewhere about May or June 21, it has applied for a conversion from a private limited company to a public limited company now. So in that particular case, we see that you can even change the name of the entity. You can edit this word private because as on date like 31st of March, it was like public limited or it was private limited, whatever the case may be. So this condition, see, the name gets actually editable, and this is nowhere possible in AOC4 or the other forms. It's only in MGT7, because in MGT7, see, you can even file it changing the name of the company, because we have to all file the details that were existing on 31st of March of the specific financial year. So whatever the changes you are making in the relevant next financial year, those changes would get automatically updated as per the MCA site settings. But you have to make sure that whenever you are filing for the MCA, the MGT 7 or the annual returns, you are very careful in entering the right information and in the right format that existed on the closure of the financial year. So that words were really important. Again, email is editable. You must have changed your email ID, or on 31st of March, it was different and now it is different. So you have to key in for the same. Again, the website and the everything that you can disclose. So this was a brief about how the details as on 31st March are important and relevant for the purpose of filing the annual return form. Now let me jump to a filled MGT 7 form for more details. Just give me a moment. So yes, this is a filled form. It is in the redacted format. So you cannot like read the details. This has been kept to maintain the confidentiality question. But however, the details are very evident. I guess it's for the previous financial year. However, I'll be telling up all the details that are there. So you can see that we have entered the SIN number, the PAN of the company, the name, the address as it existed on 31st of March 2021. Everything else is auto-populated. Even this screen is auto-populated. Okay, then we see whether the company is having share capital. You have to select yes or no, depending upon whether shares are listed on stock exchanges. If yes or no, depending upon the SIN of the registrar and transfer agent, name of the transfer agent, you have to mention that particular thing. This will again get pre-filled if you enter the SIN of that registrar, or you have to manually enter those details. Now, financial year from, we have to enter here 1st of April 2020. And it will go to 31st of March 2021. So this is the previous year form. So we have to take in the details respectively. If yes, date of the AGM. So this becomes maximum 30th of November 2021. Because for the previous financial year 2020, it was extended till 31st of December due to COVID. But this time it is 30th of November. So this here it will come 30th of November. Due date is always 6 months or 9 months if it's a newly incorporated company. So taking specifically it as 6 months. So we will be entering 30th of September 2021. Whether any extension for AGM granted. So yes, we see that 2 months extension has been granted and we'll select yes. If yes, provide the SRN. So there is no need to provide for any SRN Z999. Nothing is required because again, it has been made for all, one and all like together. So we don't have to key in any specific information, and extended due date becomes again 30th of November 2021 that you have entered in this particular section. So this becomes similar. Okay. Now we have to enter the principal activities that have been carried forward by this particular entity. So this entity is in arts and entertainment. It's in creative arts and entertainment activities, and the percentage of turnover of the company attributable is 100%. Depending upon your company's business, there are A to Z codes. There are a business activity code, and the information is there when you download the MGT7 along with its instruction kit. So you can go through it very well. Even you can highlight a particular group code here and you can select the activity code and the description would automatically populate. Again, moving towards the next section, if you have a holding subsidiary or an associate company, their names, their information and the percentage of shares would come in here in this section. Then the shareholding of that particular company would come, like what is the share capital of the company. So here you have to enter in for the number of shares that are authorized, then the issued capital, then the subscribed capital, then the paid up capital, and the nominal value, if it's 10 rupees or it can be even 100 rupees or 1 rupee, depending upon whatever the structure of the capital of the company is. So here you'll enter all the details. These details would get automatically populated in equity share capital field at the part A here. Okay. Next, if there is any preference share capital, you have to again enter the number of preference shares, the nominal amount and the total amount. If there are any specific classes of preference shares, because preference shares can be like 5% preference share, 10%, 15% carrying different coupons, or they can have a different redeeming cycle. So if there are various classes of different type of shares of preference, you have to like highlight all those classes and give their specific treatment. If there are any what we call is their breakup of paid up share capital. So if your number of shares at the beginning was X and the total nominal amount, like multiplying it by 10, as in this particular case was. So this becomes the total capital of the company, and this becomes the total paid up capital in itself. If there was any premium, you have to highlight this. If there was any increase in the number of shares, or if there has been a right issue, bonus issue, ESOP placement, sweat equity conversion of debentures or preference share, or any GDR or ADR that have been converted in, you have to key in this particular information. Or if there was any buyback, shares forfeited, or there is reduction in capital, you have to even enter for that. And at the end of the share, we'll get the number of the shares, or the total nominal capital, and the total paid up capital along with the premium component. The same goes for the preference shares, again at the beginning and at the end. Redemption, forfeiture, reissue, issue, everything would be accounted in for. You have to check in with the company specifically to get these particular details. Again, if there is any split or there is any consolidation, like the nominal value of the company of this the share is getting reduced from 10 to 5, so there would be consolidation, as now a person will be issued for 2 shares as against 1 he was previously holding up. And if a share is of 10, however the value is becoming in for 10, so there would be a consolidation, that is 10 shares would now be required to make up 1 share as the nominal value per share goes high. So if there is any split or consolidation, you have to enter the particular details here and relevant details here. Details of share debenture transfers since closure date of the last financial year, or in the case of the first return at any time since the incorporation of a company. So if it's a details of share and debentures transfers that have incurred, so you have to give in the details of the particular transfers here. So detailed disclosures would be given. Again, if there is a need of separate sheet for transfer, that has been given, the date of AGM that has been approving it, the registered transfer date, the ledger folio number, the transferor name, ledger folio, transferee details. So all the details pertaining to the transfer of that shares or securities or debentures or preference share would be given up here. Indebtedness, as we mentioned up. So indebtedness means any of the debentures or loans that have been outstanding. So non-convertible debenture, partly convertible debenture, fully convertible debenture, secured loan, unsecured loan deposits, everything would be disclosed. If there is specific class of debentures, like they are non-convertible, they are partly convertible, fully convertible, what were there before at the end at the beginning of the financial year, what was the increased component, how they were redeemed or they matured, and finally what is the amount that is outstanding. So again, you have to give in the details for the securities like the debentures, or if there are any other securities like a stock has been issued, or there is any other type of security that has been issued by the company, so the details would come in under this table for every such security. Then I mentioned about the turnover and net worth of the company being highlighted as per the definition of the Companies Act. So the turnover becomes, again, as per section 2 subclause 91 that we studied in the definition. The net worth of the company is also there in section 92. We take up the shareholders fund in full along with the borrowings or the indebtedness again. So that becomes the net worth of the company. Again, those disclosures are required in here. Next comes the shareholders or the shareholding pattern. So if you are the promoter group, so these promoters are individual HUFs. Then if you are Indian, non-resident or a foreign national, you have to give number of shares, the percentage or the number of shares or the percentage again for equity and preference both. So this is also a disclosure requirement. If it's a government, you have to specify the class of the government, the bank, financial institution, foreign institution, investor, mutual fund, venture capitalist, etc., etc. So you have to give those details, and the final figures would come in for here. Then you have to select for the total number of shareholders for the non-promoters other than promoters. So if there are Indians, if there are individuals or HUFs, you have to give in the details here for equity and preference, just like you give in for the promoters, and for the government, for the banks who are not the promoters. So in total, you have to specify who are the total shareholders other than the promoters, and who are the total including the promoters plus public. So at the beginning, if there is any whatever the numbers were as starting from the financial year, and at the end whatever the changes have occurred, you have to specify if there is addition or deletion, and if there is any transfer in the shares or the securities, you have to mention in for the promoters and members separately. Then comes the details of directors and KMPs. So composition of board, you have to give it in detail. Again, at the beginning, during the year, what were the changes, and percentage of number of shares that were held by such directors. So promoters, see they were executive or non-executive. What was the share of the percentage holding? So these being the promoters. For the non-promoters or non-independent, independent, or the nominees, you have to specify specifically. Just we are talking about the composition of board and not about the members here. Next comes the part where we have to specify the number of directors and KMP who is not a director as on the financial year end date. So you have to specify the number of directors, their name, you'll enter then the names would automatically get populated. You have to select the designation, the number of equity shares that is been held by them, and date of cessation. If there is any director who has ceased to be a director in the previous financial year, you have to specifically mention that particular date in here. Then particular of change in director and KMP during the year. If there is any resignation, there is any change in the designation, there is any change of appointment, change in, or there is a cessation, you have to specifically even highlight the same. Then comes the next section where we talk about any board meeting or any class meeting or a court convened meeting that was held. So AGM would be one that would be constant because every year we will be conducting that particular AGM. And because we are talking about this particular financial year, because for the previous financial year 1920, we conducted this meeting, this particular meeting in the financial year 2020-2021 for 1920. So in this 2020-21 financial year, we'll be mentioning that particular meeting that was held in this financial year, how many were the total number of members who attended them, and their percentage shareholding. Then we'll give detailed record about the board meetings. You can get this particular details in the board report of the company. What was the date of the meeting, how many directors attended it, number of directors, and their attendance correspondingly. If there were any committee meetings that were applicable to a company, like if there was a CSR committee, an audit committee, or like, you have to give the name, type of meeting, the date of meeting, the members who attended, and again their percentage. For the same, for the attendance of directors, you have to specify the name of the directors and their attendees. Like if they have attended all the meetings or the committee meetings, and whether they attended the AGM or not, you have to specify that. For number of managing director, whole-time director, and manager, that these are the KMPs whose remuneration details. So whatever the remuneration is being paid to them, gross salary, commission, stock, sweat equity, other, everything. So all this information would be given for the CEO, CFO, company secretary, and even for the other directors whose remuneration details will be entered. So these will be the non-executive or the executive directors depending. Whether related to the certification of compliances and disclosure, whether the company has made compliances and disclosure in respect of applicable provisions of the Companies Act. So if everything is consistent, you have to select in a yes. If there is any inconsistency, you have to select a no and give reasons for such observation. For the penalty and punishment part, you have to again give like whatever the penalties or punishments that were imposed, and like whatever actions have been taken, what was the date of the order. You have to again cite for the compounding of offenses if that was something that was applicable. Then you have to enclose or attach a complete list of shareholder debenture holders as an attachment to this form. So if you have done that, you have to select in yes. Again, compliances of subsection 2 of subsection 92 in case of listed company. I talked about MGT 8 being produced by listed companies or such other class or classes of companies. So if there is a requirement of 92 to MGT 8, you have to specify the name of the company secretary in practice who has given that MGT 8. You have to select whether he was an associate or follow, or certificate of practice number you have to highlight. Then comes the declaration portion, where the board of directors, a specific person has been made authorized to sign this reports, this annual return, his signatures, his DIN, and his digital signatures, and the digital signatures of the company secretary or company secretary in practice as applicable. And along with that, you have to make the attachment. So list of shareholders and debenture holders you have to annex, approval letter for extension of AGM. So we see in the previous financial year and this financial year, there has been extension orders by the ROC. I'll just show the website link also, that how you can get that particular, and copy of MGT 8 if the same is applicable on you, any optional attachment if any. So what is this optional attachment? It can be a UDIN. So even the CS in practice have to generate in for a UDIN for signing the MGT 8 and even for signing this MGT 7. For those UDINs, you can attach those particular UDIN along with this form, and then you can simultaneously file those particular forms. So this was a gist of what everything are in place for MGT 7. MGT 7A has lesser disclosures than this, and it is like more of a difference. There is not much a difference. The only different the mainly difference is that certification component is not there in MGT 7, like in this particular case, because in that it is for OPCs as small companies, and therefore the company secretary certification is not required. However, there is an extra attachment that has to be made, and that extra attachment is list of directors. So that has to be given in addition to what we are giving in MGT 7, and that also has a reason, because that particular section that was there in this particular form MGT 7, that has been taken back in MGT 7A. let me show you that particular section. This section, this is not existing in MGT7A, and that is why the details have been asked for separately. I really see no much difference in MGT7 or MGT7. So I'm closing up for this particular form. Let us go back to our presentation now. So we have covered in everything about MGT7. Okay. So, and I've also shown the filled form. So what are the attachments? We see the MGT8 is there, that is certified by certificate by a company secretary in practice as per applicability for a listed company or for such classes of company. List of shareholders and debentures are next. Approval letter for extension of AGM. I have to show you this. Then I have to show you optional attachment. What can this be? An optional attachment that can be a UDIN or a list of transfer and transmission of shares. So what is a transfer? If the shares are going from one person to another, that is a transfer. Transmission, if you are changing up for the first name or the second name, we are reversing the names. That is the second holder become the first, or the first becomes the second. So that is transmission. And if there is whatever the document trail is, you can mention it, because you have to give the details of transfer and transmission as per the form requires. So let me quickly show you what is MGT8 first. Let me open it. Now, actually, I'm not given the right to show my screen actually. So I have to show you each document separately. So form number MGT8 is in place. This has to be given up by a company secretary in practice. So you have to see that whatever disclosures are there are in place whenever you are getting it from a company secretary. It says that annual returns state the facts at the close of the aforesaid financial year correctly and adequately. So all these details are like quite self-explanatory. The details, the SIN, the registered address, all records have been maintained in specific. All the provisions have been observed. The rules have been followed. Everything. This is all contained in MGT. It is as per the Companies Act itself, and it has just the information that we have poured in. Who all were the auditors? A gist of what we call an audit report. It is like a brief kind of an audit report for a company. So for so and so and associates, company secretary, here we mention the membership number, CP number, DIN and UDIN. Okay, so this becomes an attachment to our MGT7. Next, what we see in the attachment thing. So next was this approval letter for extension of AGM. So let me quickly open this website. Give me a second. So you can see that by clicking on this link, we reach this extension of AGM. It is very easy to get in here. It is not much of a difficulty. If we just click ROC extension AGM in Google, so you'll be taken up to the first tab, that is extension of AGM. You click in here and you move on to this specific page. And depending upon your client company, if it's in Uttarakhand, West Bengal, because it's a ROC specific order, so it has been given by ROC Delhi. I'm just showing you a sample. So by ROC Delhi, this particular order has been given up, and this is the order. So you have to annex this particular, download this order, and you have to annex it with the MGT7 or MGT7A as may be applicable. Quite easy, nothing of a like nothing that requires much of a discussion. Okay, so I'll close up this. Now we'll be moving back to our presentation. So we are done with all the e-form attachments of MGT7. Let us quickly move to the next e-form now. What is it? It is e-form MGT7A. This is something that is coming up for the first time. I filed in for a few MGT7A like for the time being, but I'm not having a filed copy right now available. So let me show you how these forms look like. Let me quickly. So this is the form MGT7. You see, it's abridged annual returns for OPC and small companies. No much of a difference. Rules are same. Everything is in same picture. Even the basic details are the same. Again, you get the editable fields. Even if I click pre-fill here. Just a moment. So you see the details are coming up. One difference that you must all notice and appreciate, that if your company is an OPC or a small company, you will be not be given an option to file MGT7 this time. So there would be an auto population in MGT7 that you have to mandatorily file for MGT7A. However, in some cases, I have observed that the problem is coming up that even after being a small company or an OPC, we are getting an option to file even the MGT7. So in those particular circumstances, you have to see by yourself that whether your company is a small company, and if it's a small company, then you can go in for filing of MGT7. You have to see this for the particular conditions as they were existing on the 31st March 2021. That is again the closure of the financial year. In my case, I had a client who had got his company converted in the financial year 21-22, like in the month of October, and from a public company has now been into a private company. When we were auto populating his details earlier, so when we were populating his details in MGT7A, the details were coming in because the MCA database has been updated as private company for the same. However, the company requires that to be filed in MGT7, and we have to change the name of that private limited company by entering the SIN number and edit it to become a limited company, and then follow the compliances of the Companies Act that are applicable to a public company. Okay, so you have to check this very finely, because this is something that many people can basically go wrong about, and there are big differences because MGT7 requires certification and MGT7 does not require certification. So that could be of much of a non-compliance question that can come up. However, there are populations that are coming up if you are filing in for a small company or you are filing in for a non-small company. There are populations that are coming based on the SIN number. However, they are not every time in place. Okay, so you have to check in very finely. Basic details are all same. We see that the option of RTA has gone up because you can file it for just a OPC or a small company. So this is not applicable in my case. Small company is applicable. Again, financial year details, you have to again select extension if it's applicable. So OPC has no AGM because there is one member only and one member cannot conduct an AGM on itself. So in that case, AGM is not applicable. In small company cases, it is applicable. Extension, yes, extension, there is nothing to get selected here. You have to select the extended date, that becomes 30th of November. Again, nature of business, that becomes same as MGT7, again, including associates company, including joint venture. Now, if we see that their subsidiary is not mentioned up, that is because for subsidiaries, if we see small company definition was not applicable. Only associates or joint ventures can come up here. That is why the details are not there. For the share capital thing, this part remains the same. You have to enter in for the preference share, the equity shares. You have to again specify the breakup that existed. Like at the beginning, at the end, there was conversion, there were buybacks, there were preference share conversions, buyback, issue, reissue, forfeitures. Again, if there are any transfers, you have to give those details of the transfer or select nil simply if there were no transfers. Again, for the indebtedness, if we see that there are not the complete details of indebtedness, only the details of debentures have been asked for. So non-convertible debenture, partly convertible debenture, fully convertible debenture. The indebtedness part is not there in this form. It is missing. That is why it is abridged. Details of debentures, we have to select in for the security other than shares and debenture. If there be any, we have to select that. Turnover you have to enter, net worth you have to enter, and for the shareholding you have to enter for the promoters and for the non-promoters specifically, as was there in MGT7. Okay, the promoters at the beginning, at the end, you have to specify them. Okay, next you have to check in for the any member of class requisition that was held. So if there was a meeting, you have to, in this particular financial year, for the financial year 1920, there must be a meeting that was held. So you have to key in that particular meeting details that were held in 2021. There were board meetings. That details would be as per the board report of the company. The attendance of the directors, that has to be in place in there. Remuneration, that is payable to KMP directors, everything. Whether the provisions have been complied with. If it's a yes, then yes. If no, you have to mention in for the observations that have been observed. If there is any penalty or punishment, you have to specify that. Again, we have moved to the declaration component, the resolution number highlighting which gave the permission to director to sign this form, the date, to be digitally signed by the director. We see there is no certification column by the company secretary or company secretary in practice. You have to enclose the list of shareholders, approval letter of extension, list of directors. You see, this is a new option here coming up this time because the list of directors has not been taken in the above info as was there in MGT7. So you have to attach this particular list of directors. Don't miss this. MGD7 not applicable in this particular case, as it's not a listed company or class of companies, as small and OPC can file this. And optional attachment, again optional attachment can be again list of transfer or transferee as may be applicable. UDIN is not applicable here because no specific certification is required. So this was all about MGD7A. I guess this was much easier. There was no much of a thing that required discussion here. Okay, so again I'll be starting off with the presentation. So MGD7 we are done with. Attachments, list of shareholder, list of directors, approval letter of extension, optional attachment. Okay, this becomes the same. E-form FC4. So this is annual return of a foreign company. Trust me, the disclosures and everything are just like MGD7. However, because it's a foreign company, so the NRIs would be also involved. So their details are also specifically required in for FC4. So you can go in for the form yourself. If you feel there is anything that requires discussion, we can take up that. You can also email me for the specific discussion if that is required. But it is exactly the same form. There is no much difference. There is a specific form in a different form. However, the details are just like what we covered in MGD7 or 7. So I'm skipping that component. Attachments are details of promoter, director and KMP and changes therein since from the previous financial year, details of directors and KMP and their remunerations, details of meeting of the members of class thereof, board and its various committees along with attendance details, particular of members and debenture holder along with changes therein since the close of the previous financial year, details of penalty, punishment, compounding of offenses. We see everything is like more or less the same. The only differences that we observe is because it's a foreign company, so that is why they have asked for the detailed disclosures. That is it. Okay, e-form MSC3. Okay, let me show you the filled form for this MSC3. This is for the return of dormant companies. And specifically, let me tell you the attachment that goes along with this MSC3. So this is duly audited statement of financial position, statement of P&L and balance sheet. Why it is there? As I said, that it is a conjoint return that goes in just like AOC4 and MGD7 together for dormant companies. And together with that, we have to couple it with a board resolution. So let me quickly show you the board resolution, the attachment of this particular form first. Let me open it. So this is the board resolution for the dormant companies that we have to specifically mention. And it has really nothing, just it says that the approval of the board is hereby accorded to severally authorize all the directors to sign this annual form MSC3. Just this, and to pay the necessary fees. You have to attach this particular board resolution along with MSC3. So, and the audited balance sheet and the P&L. So that you have to give. And let me show you the form now. I'll show you the filled form. So this is the filled form MSC3. You can see return of dormant companies. It states no much difference. Again, you'll enter the same name of the company. Again, address would be editable, email ID would be editable, principal particular business as per MOA, financial year to which the return relates, number of directors, number of board meetings that have been held, change in management if there is any. Okay, payment of maintenance of its office and records, payment to fulfill requirements of the act, payment of fees to the registrar. You have to give those details. If there are any particulars of allotment that has taken up during the particular financial year, you have to give particulars of the annual fee and the amount to be paid. So the annual fees as per the required company forms, it's 1,000 usually, depending upon the again the capital component. So shareholding pattern you have to give, like it's government or it's others. So we'll select others because all are not applicable to us. Director or relatives, total number of shares, draft BR you have to attach, the balance sheet and the P&L you have to attach. Then the resolution number that we just attached, designation director, certificate by a practicing company professional. So why this is required, I already told you in the discussion. So this has to be given up. So company secretary, associate, and you have to file up for this MSC3. Much easier than the returns that we are usually filing because it's again, the company is not functioning, doing any business. So MSC3 is quite easy. Okay, let us come back to our presentation. We are just left with a few like 2 or 3 slides, so need not worry about anything. So next is the LLP 11. E-form attachment is just one, that is details of the LLP and of the company in which the designated partner is a director or a partner. So let me show you this attachment, that how is this attachment in place, and then let me show you the form 11 quickly. Okay, so I'll sharing the attachments first. So this is the attachment. So the directorship or partnership of Mr. who will be the designated partner or partner in the company, the name of the company and the designation, and you have to get it signed from that particular designated partner. So this is the only attachment that you have to attach in, and you have to take it from all the directors, okay, all the designated partners. This is Form LLP 11, much easier, again, no much of a thing of a discussion. So you have to enter the financial year, the pre-fill the details, the name of the LLP, the address, registered office address, the service, everything would be auto-populated. You have to enter in the contribution. You have to enter in for the designated partner details first. Whatever contribution is holding up, you have to just enter the DPIN and the details would come in. DPIN and DIN are alternative terms. So you just have to enter them. The number of his contribution, the number of partnerships that here is a partner to the LLP, number of LLP or the companies, the attachment that we just attached. So designation again for the second designated partner. Okay. And next, so there are 3 designated partners. If it's the partner is a body corporate, so we have to attach in for a body corporate and provide the details of the individuals who are partners, LLPs, companies, foreign LLP, foreign company LLP. So you have to again give the details. If there is any penalties that are being imposed, you have to give details of those penalties here. If there are any compounding of offenses involved, you have to make the attachment here. For the attachment, you have to give the verification and the certificate. So verification would be done by one partner, certificate would be given by the second partner. And if it involves their certification, you know that we have seen that if there is a certain turnover or paid up capital or the contribution is like more than those limits that are specified, so you have to give in the company secretary, you have to take this particular certification from the company secretary in practice. Okay, and this form goes good. So again, this was quite easy, not like much difficulty, not much of a difficulty. And now we are back to our presentations. The presenter, we have covered in for all the forms, specifically for annual return. Let us take keynotes for the financial year 2021 now. Okay, this becomes the second last slide. So there is no additional fees for filing LLP Form 11 for the financial year 2021 up to 31st of August 2021. So this date has already gone back. This was again an extension because otherwise the dates would have been 30th of May 2021. Okay, so this was an extended date till 31st of August 2021, again due to COVID. For the companies, no additional fees for filing e-form MGD7 or e-form MGD7A as applicable for the financial year 2020-21 up to 28th of February. So this is a way bigger extension that has been provided by the general circular that was dated 29th of December 2021. So we have more than 15 days to complete this compliance for filing the annual return. Next, OPCs and small companies shall file their annual return in e-form MGD7A for the financial year 2021 and onwards. So this is a new form that has came up. So kindly decide by filing the OPC and decide for filing for the OPCs and small companies. For small companies, you have to take the limits as the specific 50 lakh limit for paid up capital and for the turnover 2 crores. The extended limits that have been increased limits that are applicable from the next financial year. So you have to observe those limits taking for the financial year 2020 and 21. MGD, the paid up share capital and turnover limits for small company has been enhanced with effect from 1st of April 21. Thus, for the financial year 21, the existing limits shall prevail, just like what I said for. The requirement to furnish MGD 9 has been done away with starting from the financial year 2020 and 2021 onwards. So there is no need to make any attachment of MGD 9 either in AOC 4 nor in MGD or nor in your website disclosure or in any extract of board report. So these are the keynotes for the financial year 2021 and 21. I guess this session was much details. We have finally covered up all the details. So these are a few of my details. You can take note of them and you can contact me on my mail or on my WhatsApp number if there are any queries. I'm thankful to the Hyderabad chapter of ICAI for inviting me for the session here. And we are good to take all the doubts now, whatever came in. So I guess we have sufficient time to take up that. So I'll stop the screen share now.
Yeah, thank you, Visual.
Yeah.
Just 1 minute, sir. Yeah.
Sure. Take it.
Sir, we have 9 questions as of now.
Great. So I'll open up the Q&A tab.
If you want, you can take 1 minute break.
That is all fine. I guess we are in a habit of taking long sessions now because everything is going digital. In the physical, we had like a break after just half an hour, but in these type of sessions, okay, we have quite questions that are there, so it's good. Okay, so let me start with the first question. So it says, in a listed company, when a vacation of a director takes place under section 164(1)(b), that is not having attended 12 months board meeting with or without notice, whether filing of DIR 11 by the ex-director is final to remove his her name, or the company to file DIR 12, only then his or her name can be removed. Please elucidate. Okay. First of all, this question has no significance with the annual return thing. This is again a company law specific query. So I mind saying this, but you can take this specific query in my, you can email this particular query to me. I'll reply to this specifically, because let us take the queries that are in nexus with what we had a discussion about. I guess that would be much finer. Sir, is there anything possible as dormant LLP, like dormant company under section 455, and there are no? See, for the LLPs component, so the LLPs, there is nothing that has came in for the LLPs like dormant companies in there in 455. So as of now, there is no concept of dormant LLP, and you have to keep in the compliances in order. However, if your LLP is not conducting any of the businesses, so you are not liable to file in, because even the audit is not applicable for you. So you have to just make good the two e-form compliances, that is LLP 8 and LLP 11. So you can file those particular e-forms and you can have your LLP running. Why do you need a dormant status for your LLP when you can just file two forms and keep the status as like that? Okay. So this being good, dormant LLP is not required. Okay, small company definition change in budget 21 for the financial year 2020-21. Old limits were applicable for small company definition, but MGD 7A updated with new limits for FY 2020-21. So this is a myth. We will not follow the e-form. We have to follow the law. And as per the law, the new limits are applicable starting from the financial year 21-22. So for the previous financial year 2021, you'll have to observe for the small companies limits that I have just summed up as 50 lakh and 2 crore, and not as the higher limits. Okay, so while preparing the forms, you can key in the relevant information, taking either MGD 7 or MGD 7A as may be applicable. New limits are for the next financial year and not for the previous financial year that we'll be filing for. Okay. Is MGD 7 is the form that we need to file ROC, or any other form is also required to file? Okay. When we talk about annual filing, we have two forms, AOC 4 and MGD 7. So for the first is the annual, in totality, they are known as annual filing. However, if we talk about annual return, MGD 7 or 7A is the annual return, and AOC 4 becomes your statement of solvency or statement of financial accounts for the company to be filed with the ROC. So every year you have to make good at least two of these forms as annual filing component, either the AOC 4, the due date of which is 15th of February 2022, and the annual return MGD 7 or 7A, that the due date is for 28th of February 2022. Okay, so you have to cover up for the same. Next question is, sir, sometimes promoters change themselves from promoter nomenclature to person acting in concert or pact, right, in listed companies. So you please explain the reason for the same, and also the reporting of PAC, if any, in annual return, as there is no specific place to record mention PSE in the annual return. Okay, a good question. So we have seen the nomenclature to change by itself, like people are not being classified, or they get not classified as a promoter, but they get classified as a person acting in concert. So the definition of the promoters, if we see, is not in totality clear as per the laws that are governing, like it is not being specifically provided for by the Companies Act. So when we talk about the meaning of promoters, promoters mean the persons who initially started or the incorporated the company and brought in the subscription or the subscribed capital. That will always stay in the MOA. That will also stay at the last page of the AOA. That were the initial subscribers or the promoters who started up this company. So whenever we are talking about promoters, if these person name themselves by themselves as person acting in concert, their classification by themselves will not change. They'll stay the promoters. However, if you want to specify a category other than promoters for them, there is a category known as others. So you can specify those particular members there. You can specify them as others. There is no specific requirement that is required. However, if you want to make a better compliance, you want to disclose everything, you can make an optional attachment. You can write that these people are the people who have been mentioned in the others field are person acting in concert, and you can cite for the detailed disclosures. So this way, even those who change by themselves the nomenclature as PSC, so that can be covered up by the MGT 7 or 7A itself. Next question. For small companies, then client himself can file MGT 7A and AOC 4 with his DSC, right? No CS DSC. Is this correct? Okay, for small companies, yes, the client won't say he himself can file, because again, it's a specialized thing requiring specialized efforts, and he must consult a professional. It can be a CA or a CS. But yes, you not need to get a certification from a CS for your client this time. Up for this course. So MGT 7A, only the certification of the director is required. And for AOC 4, for AOC 4, the certification of company secretary is not required. AOC 4 can be filed in well with the sign of the director and with the sign of chartered accountant. And for small companies, you need not even attach the signature of the professional. You must have not seen this, but if you are already having a small company, then you can attach the signatures of the director and not the signatures of the chartered accountant or company secretaries, and the pre-scrutiny would go through easily. So for small companies, yes, the director's signature would be sufficient. No need for a CS/DSC. What is the procedure for extension of AGM, and is it difficult for small closely held to follow this procedure? No. See, if you're talking about extension of AGM, so this is something that came in by law in itself due to COVID restrictions this time and the previous time. However, if you want to enroll in for a process of extension of AGM, you again have to follow a specific set of questions, specific sections of provisions that are there in the Companies Act and the rules that are there. You have to follow that procedure. You have to make an application to the registrar. You can wait. Will have to wait for the procedure. You have to file in for the general form GNL1 for the GNL2 for the same. And then only after getting the due accordations, you can get the extension. It is not a difficult process at all. It is an easy process. However, it's a for sure. You have to make certain follow-ups for the same. In case of company incorporated 2020, FY ending would be March 2021. So how many board meetings is required to be held? As regular FY 4 board meetings are required. So the addition of the board meeting. So there should be a minimum of 4 board meetings, number 1. Number 2, when we talk about that, so the maximum gap between 2 board meetings should not exceed 120 days. So that is the condition. However, if your company is incorporated in December 20 and you are having just 3 months for the same, so you can always schedule 4 board meetings if you wish to. If you wish to have 2 board meetings, even that would be sufficient. It would not be accounted as a non-compliance, because all the procedures that you are required to follow, you will be able to follow that. So if your company incorporation date is not falling in the complete financial year, then reasonable number of less board meetings can be held up. Not a problem. Sir, please show some light on board report. Okay, so board report, no much changes. Whatever was existing in the previous year that you filed in for, the same compliances you have to make for the board report. Board report is for the directors to decide upon whatever the changes have been made, whatever the things have been given up. So everything would be as per the provisions as they have been given under the Companies Act. You said the name can be changed in MGTs, but there must be more formalities to change name rather than only changing it in MGTs. Okay. So when I say that name can be changed in MGT, it is only after the legitimate process has been completed. When you follow the complete process of changing a public company to a private company or so, then after legalized process has been done, you have filed in for all the NCLT or the RD approvals and the ROC approvals, only then your name would get changed in the ROC registry. When I said that name can be changed, it meant that, say, suppose on 31st of March 2021, your company was public limited. And at the time of the AGM, your company's status changed from public limited to private limited. Has happened by and large because the demat formalities came in the last to last financial year, and many companies were in the process of conversion, and they have achieved those orders in financial year 20. Reason being, the RD department was not working with full effect, and in 21 we have received more such of the conversion requests to be proceeded for. So when you pre-fill the information, depending upon when your company has been migrated from public limited to private limited while filing this annual return, the auto-populated name would be XYZ Private Limited. On 31st of March 2021, your status was not private limited, it was public limited. So it was for that reason that I'm asking that name, not because we wish to change the entity ourselves. It is just for the purpose of disclosure. We are not making changes with the names by ourselves. Only the legitimate things that are existent on 31st of March 2021 that have to be disclosed for. Is there any provision to revise approve MGT7A for any discrepancies there? By itself a procedure, but you can visit the ROC's office and you can make an application that you have filed for a wrong MGT7A having wrong disclosures. If he is satisfied enough, he can cancel those particular annual returns and then he can give you an order to refile them. So that can be done at the point of the ROC itself. You cannot make it using the online services that are available. Sir, kindly request you to display your WhatsApp number. I'll even ask the management to mention that. Sir, one practical problem almost all the time the clients come to us only in the last minute for compliances. How do we reconcile to save cost for the client for non-compliances by chance? So I guess if your client is coming late to you to file this annual, the risk and the time and the effort is totally dependent upon him. You don't have to worry for your client who is taking much time to furnish those details. You should either an advance notice that either furnish these details or the non-compliances would be at your turn. So that would be clear on your part as a professional. However, you don't have to worry for the non-compliances or non-accreditation of your clients. Again, everything that is being filed is own consent, his own digital signatures are there. As a professional, you can check prima facie for whatever the information they have given it to you, and you can decide either to attest that information or not. You don't have to worry for your last clients who are coming to you late. Is there any concept of small LLP where client himself can file the return is very small, say 1 lakh and turnover is approx 2 lakh. Okay, so there is small LLP as on date. LLP Amendment Act is coming up very soon. We are following an LLP Act that was there in existence since 2008, but I am sure we'll be getting minor imprint of the LLP very soon, and many new concepts would be like coming up in our eyes because government is focusing on partnerships and LLPs this time. But as of now, there is no concept of small LLP, and I'm sure you are also knowing this fact very well. You are just asking this to what I have to say to satisfy that हाँ कुछ ऐसा है तो नहीं, just because of that. Sir, can extension by ROC for AGM now possible? You have taken much time for getting that basically extension, but you can, if the reasons so demand, if there are such strong reasons that you have that for extension you can still apply in for, so you can definitely make an application to the ROC, and if he is satisfied with those facts, you can have that particular favor. However, it will again depend upon the facts and circumstances of each case. Sir, are we allowed to use our email ID on behalf of clients? Will there be any on this, please? Okay, so whatever information we are keying in for 7 or 7A, that should primarily belong to the client. But we see that there are a number of OTPs, a number of things that have been coming up. So this is something what we follow as an individual. So what we do is, whenever we are we form a new email ID, and that email ID is given the access to the client. We take a management representation letter saying that this email ID can be by the professional just for complying with the OTP and requirements that sometimes the director or the officers cannot reproduce. So in that case, the email ID could eventually belong to the company. However, having an access, you can do things at a much faster pace. So you can add this, don't use your own like personal or professional email IDs. That is not desirable. Make this and you can share, make this fairly visible to the client also, that you are creating this ID, make this to his, bring this to his notification reference also. And after that, you can definitely use that particular email ID for making good the compliances. Okay. Is there any other questions that are left? Wait.
Yeah, two more questions came, sir.
Okay. Just
Can you attend this, sir?
Yes. Yes, I can read it. Sir, ROC can maximum extend for 3 months as per section 96(3) by general order. Extension is given for 2 months. So now ROC will extend for another 1 month or 3 months. So the maximum time, as you correctly said, is 3 months, because it's like 9 months you have to finalize for the first financial year. If it's the first newly incorporated company. For an existing one, it is 6 plus 3. So it is 9. So you will get it just for 1 month, because extension orders are already there. And when we talk about extension, it's not extension in substance. It's just a grace period that has been added for. Whenever you will miss up the date, penalties would start up from the very date the due date was in place. This is what the government has framed up this time, that if you say, if you skip this date of 15th February of filing the compliances, your due date will not start from the previous extended due date, but it will start up from your AGM within date. Okay. So you have to be in particular, see those provisions carefully. So, but for this particular ROC thing, it can be maximum for a period of 1 month only, because the extension is a generic waiver given due to COVID. Okay, there is a three questions now. Is it still we need to pay penalty under section 96 in case of taking advantage of latest circular fee for AOC 4 and MGT 7? Is there still we need to pay penalty? No, there is no need to pay penalty. Even that would the late fees basically. So the late fees will automatically not populate. And if you are filing it till 15th of February or 28th of February, the late fees that would be populated. Is there any revision of forms like income tax return? Revision is not possible. You can get those forms cancelled, as I told you. So after you get them, you can again have a refiling of this. If the financials are ready between after original AGM before adjourned AGM, is it considered valid attachment for it? If financials are ready between after original AGM, so these are like not adopted. These financials are somewhat that are we talk about that these have been not been adopted for. So this is a valid attachment for AOC4. However, when financials are in place, you have to file those adopted financials as well in the AGM. Due to decriminalization, you talked about whether a few years of non-compliance also would result only in penalty provision and not. Whenever this provision of decriminalization came in place, only from an onwards period we can talk about decriminalized provisions. If you have created or committed an offense when certain criminalization provisions were there in the act, you continue to get dominated or being ruled under those particular specific set of provisions, and that is why you have to take the charge of imprisonment along. Okay, so you cannot skip it because now this has been amended for. Okay, they all, sir. Will penalty auto or for the separate hearing will be done? It will automatically populate for delayed filing. You will see the late fees coming up in your annual return forms for sure. Everybody, I guess I'm able to solve all those.
Just 1 minute.
Yeah.
Thank you, Ujjwal sir. Permission, I am requesting our past chairman CA, our earlier chairman, sir, past chairman 2019-20, Banu sir.
Yeah, Satish.
Yeah, thank you. You joined little late actually.
Yeah.
I request you to give closing remarks before I am projecting vote of thanks formally.
Okay, thank you, Satish ji. Well, though I joined late, it was a pleasure listening to Ujjwal. Ujjwal, true to his name, has been very bright and has thrown a lot of light on the ROC filings. And the way he answered the questions with confidence and without batting an eyelid proves the mastery or the subject that he has. And Ujjwal, I have one small clarification again on what you just said regarding the cancellation of forms. You were saying that a file cannot be revised, but it can be cancelled. Now, if you cancel, what about the filing fees? Can you just elaborate on that? Suppose I have filed on time, but for some reason I have realized that there has been a mistake in the balance sheet, or did not file the proper audit report. In confusion, the old audit report was filed, or the caro was missed and the draft was filed whereas the original was not filed. So these things do happen practically at times, not always, but it is sometimes it happens. So can you just, out of your experience and as per law, how to get over such situations?
Now, these are situations that are coming out of great practice and experience, because sir must have been to the ROC and got the forms cancelled, and he must be made liable to face the additional fee part also. So that is why he's bringing up this in reference. So wherever we are cancelling up a particular form, we are admitting that we filed a wrong thing and it goes off the back record. So whenever we are filing the new forms, that comes with fresh filing dates, and they are never taken back from the old filing dates in space. So we have also shared this particular view with the ROC that this is a revision. However, he was of the view that revision is not possible as per the provisions contained in the Companies Act and in the rules therefore. And therefore, whenever you are cancelling a particular e-form and then you are refiling it, you have to bear the charge of the additional fees that will be coming up. So for the correction, there is cost of compliance also that is involved in place. So when that is why many of the people are of the view that if you have filed it wrong, then let it be. Whenever the notice will come, we'll take the charge, because this late fee would be like going into numbers, because it's 100 rupees per day and extending up to X amount in lakhs. So as of now, the ROC and the MCA people are helpless in providing us for a fee adjustment, or they are not helping us in providing the additional fee waiver. So if we are of the view of correcting that particular compliance, we'll have the charge of the additional fees. So making good the compliance, we are even asked for a lump sum amount in by way of an additional fees, and that is what is getting done in ROC these days.
Thank you, Ujjwal. And I think well, all of us had a very enlightening session, and thanks once again to the secretary and executive committee of the MC for selecting such a young and bright and erudite speaker. Thank you, Ujjwal, and over to you for the official vote of thanks, Satish ji.
Thank you, Banu, for your what do you say, closing remarks. Actually, Ujjwal sir, I can say it's a wonderful, lucid and power-packed presentation. No more words. The speed and the way you touched the subject, very wonderful, sir. Really appreciate. We are really good to hear you also. We Hyderabad members are very happy and lucky to have you today as a speaker. I sincerely thank you for accepting our request to address us, even though your busy schedule, you take out some time and give it to us. Thank you very much, sir. Sincerely thank you for sharing your experience, expertise, and knowledge to us. Sir, as a token of appreciation and gratitude from Hyderabad branch, please accept our virtual certificate of appreciation, sir.
And it will also be posted to you, sir.
Definitely, sir.
Certificate.
Thank you so much. Thank you so much.
Visible?
Not yet. Yeah, now it's visible. Yes.
Just a minute, sir. Accept, sir. Thank you.
Just a small correction for the name, sir.
Yeah, just I observed, sir. Actually, I'm about to tell you. It came actually in the place of son. About to tell you. Sorry, really sorry.
That is absolutely fine. That's ignored.
We'll send it to you.
Sir,
I will make it. I will correct
That
it.
is
Sir.
okay.
Yeah.
Satish, since
Thank
we
you,
are
all
not
the members for your
Satish, 1
participation.
minute. Since we are not ROC, you can you can send a revised certificate.
Absolutely.
Definitely. Nice timing.
Yeah.
Thank you all the members for participation, the encouragement to thank you Pankaj sir, Banu sir and Rajan madam for making this program grand success, and thank you all the staff of the branch. With this, we are signing up for today.
Thank you. As
Good night to
just one thing, Satish ji, somebody asked me to share my contact details.
Ujjwal sir,
So
once
if you-
again, thank you. Special thanks. Please, yeah.
Yeah, I'll add those details so that everybody can take those.
If anyone asks also, I will send that one, sir.
You can take up from Satish ji.
Yeah.
And just one more second, ma'am at the beginning asked me that from where I got the time to study so much. So I would say that fortunate that everything we entered into got well in time, and my practice area and domain was also I towards laws more. So the domain became taxes and corporate law in substance. So doing CA and CS was an allied thing. So because the subjects and the core area are the same, and law is something that everybody is excelling towards. So, but the education qualifications don't matter. The real essence is the knowledge, and we are always in the process of learning. Even we have eminent faculties, eminent people here. Even Satish ji is there, who is practicing since long. Even Bhanu sir is there, who is there. And we all are still learning, even from the juniors, even from the seniors, for the allied professionals. And I guess this hunger for learning should never end. And that is what makes us a better professional at the end.
Really good, sir, and motivating for all of us, actually. Don't feel bad. We are very, very younger to you compared with us. So we should learn a lot of things from you. Really appreciate, sir. Thank you.
Okay.
Yeah, once again, Ujjwal. Thank you, Banu,
Okay.
sir. Thank you all the members. We are signing off. Yeah.
Okay. Bye-bye.
Thank you. Yeah.